At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, November 22, 2022, Mullen is reselling 220 million shares of Mullen stock. Mullen stock has received another negative catalyst. Mullen Automotive has disclosed its intentions to resell up to 220.82 million shares. Isuza Holdings and Acuitas Capital are the largest eligible reselling shareholders. Mullen stock is down more than 90% year to date. Mullen Automotive, Nasdaq MULN, stock opened lowered by more than 5% today after the electric vehicle company disclosed plans to resell up to 220.82 million shares. This news comes about a month after Mullen announced that it would resell up to 900 million shares. Unlike last month's resale, the current resale will only consist of notes that are convertible into shares of common stock. Mullen will not receive proceeds from the sale or conversion of these notes. On November 14, Mullen filed a third amendment to its securities purchase agreement. The securities purchase agreement states that certain investors would pay $150 million to receive convertible notes instead of Series D preferred stock and warrants. The notes carry an annual interest rate of 15% and could be converted into common stock on November 21 and at any time or times at the discretion of the holder. Mullen announces plan to resell up to 220.82 million shares. The conversion price of these notes will be equal to the lower of 1. The closing price of Mullen on November 14, which was about 30 cents. 2. If mandatorily converted on November 21, the closing price on November 18, which was 27 cents. 3. If converted after January 3, then the closing price of Mullen stock on January 3. With that said, both the second and third options above are bound to a price floor of 10 cents. Isuza Holdings is the largest eligible reseller and can resell up to 81.9 million shares of Mullen stock. Acuitas Capital trails after and can resell up to 80.3 million shares, followed by Michael Friedlander who can resell up to 401,503 shares. All in all, this is not good news for Mullen Automotive. It shows that Isuza and Acuitas, the two largest shareholders in the company, are willing to substantially reduce their positions. In addition, the conversion of notes will dilute existing shareholders. For every share of common stock received from the conversion of the notes, the holder will also receive warrants exercisable for 185% of the common stock at an exercise price equal to the conversion price applicable at the time of conversion of such note. Mullen is well aware that the conversion of securities into common stock has a dilutive effect. The company warned in its filing, "Our commitments to issue shares of common stock or securities that are convertible into shares of common stock may cause significant dilution to our stockholders." As of November 17, there were a total of 1.43 billion shares of common stock outstanding. However, Mullen recently disclosed a proposal to increase authorized common stock outstanding from 1.75 billion to 5 billion. The issue will be voted on at the special meeting of stockholders on December 23. Mullen opens the hood on Bollinger Motors deal. Bollinger Motors had $1.13 million of cash on hand as of June 30. Mullen Automotive acquired a 60% controlling interest in Bollinger Motors last September. Bollinger reported a net loss of $6.34 million for the 6 months ended June 30. Mullen Automotive stock is in focus after the electric vehicle company released the unaudited financial statements of Bollinger Motors for the 6 months ended June 30, 2022 and June 30, 2021. In September, Mullen paid $148.2 million in cash and stock to acquire 60% controlling interest in Bollinger. At the time, CEO David Mitchery commented, "Combining Bollinger's vehicles with our existing Class 1 and Class 2 EV cargo van programs gives us the chance to dominate the entire Class 1 to 6 commercial light and medium-duty truck segments." Bollinger boasts the B1 and B2 trucks in its unreleased lineup. The acquisition of Electric Last Mile Solutions assets, notably its production facility in Mishawaka, Indiana, will help speed up the release of the two trucks by 12+ months. Production of the MULN 5 will also transition to the facility, with a starting date set for 2024. Mullen releases Bollinger's financials. For the 6 months ended June 30th of this year, Bollinger reported a net loss of $6.34 million, down slightly from a net loss of $6.6 million a year ago. That was caused by research and development expenses of $3.76 million and general and administrative expenses of $2.75 million. Other income totaled just $181,025, up from $41,081 a year ago. Furthermore, the value of Bollinger's property, plant, and equipment totaled $1.12 million, down from $1.39 million year over year. This is a bit concerning, as one would expect an electric vehicle company's tangible assets would increase over time as it works to produce vehicles. As of June 30th, Bollinger had just $1.13 million of cash on hand, down from $3.43 million year over year. Total assets as of then totaled $4.33 million. It's highly likely the company would be having problems operating with its low cash balance if it wasn't for the Mullen controlling interest acquisition. The startup nature of Bollinger also creates several risk factors, such as securing manufacturing contracts with suppliers and failure to commercialize products. In October of 2019, Bollinger started collecting $1,000 reservation fees for its B1 and B2 trucks. At the end of 2021, the company decided to postpone the development of the trucks and refund all reservation holders. As of June 30th, Bollinger is still on the hook to refund $103,000.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.